Hello everyone, this video is going to sound a little bit different as I have lost the microphone piece on my headset, so let's just make this really quick. The stock market dropped into a neutral condition following yesterday's, or excuse me, the 11th sell-off. That would be Wednesday, I do believe, if my dates are correct. And so we had to switch to neutral here. Main reason is because we had higher volume on all of the indexes, all of their ETFs, inverse ETFs, leveraged ETFs, inverse leveraged ETFs. And the biggest reason because the Russell 2000 actually closed below the 50-day moving average, ending that simple uptrend. So we switched to neutral. However, as we know, after days like this, we normally find a bottom and then rally in this quantitative easing environment that we are in. As long as the Fed is printing money like toilet paper, there's no reason to get too bearish, and that was clearly on evidence yesterday with our new long position QIWI. I did not make a video, so I did not tell you this is one of the best setups that we've seen all uptrend. And I love how the fucking thing happens right whenever we get a switch to the neutral condition. Isn't that cherry? So instead of being a 5% position, like anytime you'll see this chart pattern and this kind of equity that has the kind of sales, earnings, return on equity, cash flow, profit margin, and institutional sponsorship that this one does with the BOP volume and outperformance of the relative strength to the overall market, it's definitely a 5%, 10% position depending on how much volume. The volume on this one indicated 5%. However, with us switching to neutral, that got shot down and we only made a 2% position. Luckily for me, due to a trading error, it's almost a 4% position because I thought I canceled one of my market orders to increase the size of the market order to the correct. There was a simple addition error. However, both orders executed. So I happen to be long slightly under 4%, and it was up 5% today. And it's also giving an add signal with higher volume and a breakout of the current consolidation pattern. Ascending base, base on base, whatever the hell you want to call it. I don't care. It's a breakout to a new high. The only problem I have is that BOP fell from the day before. That's kind of odd to me, but I guess not really because this market continues to be kind of weird since 2009, 4 years on. And it is what it is. Also, we got another add signal in Facebook. Facebook has retaken the 50-day moving average 3 days ago and is now breaking out higher on heavier volume. And with the strength in Twitter, it's got confirmation as Twitter didn't even pull back during the pullback. And in 1, 2, 3, 4, 5, 6 sessions, it's up 26%. So Facebook seems like an obvious big brother play. LinkedIn is continuing to base out, so it isn't of interest to me yet. And also a new long position. Tesla Motors is breaking out to a new short-term high. Volume is below average and is below the 50-day moving average. But as each subsequent event happens, I will add to this position if the market decides to move higher. So this is going to be the first buy of Tesla following its new base. Then a move above the 50-day moving average will be another buy, and then a breakout above those late November highs right back here will be another long position in Tesla. But Tesla, with its earnings and sales growth the past 3 quarters and what they estimate to make in 2014, it's definitely one that I want to continue to accumulate, including Kiwi and Facebook. These 3 stocks are all just absolutely incredible. And then we have partial sell tonight. ANGO closing below the 20-day moving average, not producing any gain since we went long, so that's a 25% sell. GNW is selling off below the 20-day moving average on above average volume. That makes it a 25% sell. And then an interesting sell here in OTIV. Overall, technically, there's nothing wrong with this basing consolidation pattern. Volume was light today, but it closed at 294, puts us below the open of our signal date of 3. It's still above our ultimate base lows of 297, 295, 297, I guess you could say, of the signal date, 292. So we're 2 cents above it. Still, because of that, we're still closing below the 20-day moving average, but it's lower volume, but it's below the open, but not below the low a day, and not below the ultimate lows in the base. So you can do 50%. I'm just going to do 33% because of the low volume. I believe if we can get this market to start moving up again, OTIV is going to outperform. But I can't predict the future, and neither can you, and neither can anybody one else if you happen to see anyone try to, or if you still God forbid, watch CNBC. Jesus Christ, I don't know why, but I wouldn't believe anything you hear from any of those guys about the upcoming market. Anything can happen. So as it is, what we got to do to see us go back to a buy condition is we got to get above these closing highs, 1131 back here on the Russell 2000. That will be good enough for me. NASDAQ will have to hit a new high. New York Stock Exchange has got to get above the recent highs of 10,146, and then we'll be good to go. But as of right now, we're in neutral.